Back to another episode of Drilling It Down. This is your co-host, Wes Lyon, and with me today, I have Tyler Ott again. Ty, welcome back to the show.
Thanks for having me. The audience might be getting tired of hearing me.
Yeah, we are recording the first two on the same day. I didn't think of this. This is going to be our second video one, which means we're wearing the same thing.
Oh, you're telling me this isn't tomorrow where we wear the same clothes?
Oh, no. Hey, maybe we have a weekly routine. I pretty much do. I'm wearing my white shirt, so... Oh, no, I've got a purple checker. Uh-oh. No, so Tyler, though, we do have a little bit of a new audience on video here, so tell us a little bit about yourself, how you got here and what you do.
So, I kind of have the similar background to Wes. We actually met in school, met at Virginia Tech, went to the same fraternity, did the same major, finance and accounting. From that point, we kind of went separate ways. Wes did more of the finance stuff. I went on more of an accounting track, worked at the Big Four, didn't love accounting, switched to more forecasting, went to Freddie Mac, and then wife wanted to move south. I sent a message to the group chat. Wes was looking for another CPA. It all kind of worked out. Really been enjoying working with dentists and specialists to achieve their financial goals.
No, awesome. Well, it's great to have you here. And for those viewing who don't know who I am, I'm the managing partner here at the McGill & Hill Group. And here, really what we do is we just help dentists make better financial decisions. If I had to sum it up real quickly, that's it. We're trying to help you make better financial decisions. We've been doing this for just about 40 years now, I believe. So I'm only the second managing partner of the group to ever exist. The first one would be John McGill, who is still here. Still working. So no, but overall, I think today we've got a fun topic we want to go over, something you were asking me about. So it's, I think, should you be scared of an IRS audit?
Yeah, that's a reasonable question to have. Audits have been going up, and we've been having a lot of clients that are worried. It's usually one of the first things, or not really the first things, but usually one of the few things that a lot of our clients mention. They said, should I be doing this? I don't want to get audited. What happens if I get audited? And we're here to provide you with some recommendations on how to prepare, make sure you're covered, and essentially have as little worry as possible, because it's still going to be a little scary should you get a notice.
Yeah, I think kind of kick it off here. First thing is, over the last 25 years, the IRS has been extremely underfunded. I mean, extremely. So I think recently we've got 87,000 new IRS agents. Which president put that into place?
I think it was Trump.
I think it was too. A lot of people don't realize that. Some people get scared, depending on which side of the political aisle you're on, might sway that. But, I think it's been a big talking point that, Joe Biden's, he's going after people. And it's like, well, people needed to be gone after. So
I think, again, it comes down to the political aisles. They're not coming after really the everyday doctor. They're coming about people that are committing real fraud. There's fraud that has been, in the billions of dollars that they're getting taken advantage of, and they're just kind of crack down on it.
I think they estimated the employee retention tax credit fraud to be almost $2 trillion. So that's not $2 trillion that got processed and paid. They stopped paying, but they think they had about $2 trillion filed, and they had an estimated, I think, 85 billion they thought actually would qualify. So, there's over 1.9 trillion there they think is fraudulent. That's the big fish they're after. However, they are going to increase IRS audits. They are going to increase random audits. The best way to stop people from doing this stuff is just scare them that they might be coming around the corner. So I think audits will go up. So my first piece of advice to everyone is just know you will get audited at some point in time.
Yeah, it's a good chance you get one. And I guess first question for me is, how does an audit work? How does the whole process get started and kicked off?
Yeah, well, the first thing before we go into that, just so you know, you're not going to get one every year. You're not going to get one very often. You'll probably get one throughout your career, though. Maybe two if you're unlucky. It's not unheard of. However, how do they happen? How do they kick off? First thing is you get a letter. You do not get a phone call. Do not ever answer a phone call from the IRS. You will get a letter, at which point you will probably get contact information for the person you are going to correspond with. It is not the end of the world to get an audit. There may be a reason they're auditing you. That can be number one, that you may have been selected for a random audit. So my first piece of advice is don't do anything that's going to trigger an audit. I think, I was dealing with a client that she called me up, and there was one of these tax groups that, promise how much they can save you. And we somewhat do that. We just stay in the bounds of legal. But they had set up an extra entity owned by, an ex-spouse. And it was just, without getting into too many details, there were a lot of illegal things going on, a lot of red flags. And that's why the IRS was there. Fortunately, we got this correspondence, we got the agent, and we discerned pretty quickly that this agent was really after the big fish that had recommended it to her. So I'm not even certain she's ever going to get in trouble for what went on. So, that's pretty easy to deal with. I don't think they even showed up. I just called. I said, hey, they've got you. There's no point in trying to defend this. You're going to rack up tons of legal fees. Let's give all the information to the accountant. Have your accountant contact this auditor and say, hey, look, we fixed it all. My client meant no harm. I picked her up after the fact, but she'd been swindled into doing this. And, we're willing to cooperate, give you anything you want. And I haven't officially heard if that's going to end it, but it seemed like that auditor was more in tune or wanted to know who the promoter was, who they needed to get in trouble, than they really were after somebody that, they did something that was not right, but they didn't do it intentionally. Those audits, if you get one, how they're going to work, it works a little bit differently on all of them. Depends on the entities, what you did, how much trouble. Those ones you absolutely want to seek some professional help pretty immediately. If you get audited for something that was probably a scam, or you did something that might be illegal, the first thing you want to do is contact a CPA or a tax attorney, and not the one that recommended you did this crap. That is the first rule, is no, not the one that said you should do this. Syndicated conservation easements were a really big thing back in the day, and some companies are still recommending them, to my shock. But they were fraudulent. Not to say conservation easements are fraudulent, but most of the syndicated easements were fraudulent. They're all getting audited. A lot of people have to go back, and the CPAs in Atlanta were recommending them. And, a lot of people go back and say, well, my CPA told me this, this, and this, and what I did was right. And, my first question when that happens is, well, is this the CPA that recommended you do it?
Yeah.
I said, no, let's go to another one. And actually, at our recent tax seminar in Atlanta, somebody came up to me and asked, and I said, that's not who you want to get your advice from. I'm not really the person to help you, kind of gave him X, Y, and Z. And he said, hey, I've got another firm that offered to handle this for 10 grand. And, I started asking questions. Does this firm sell these, do these? He said, no, they're really just tax attorneys that help clean this stuff up. So that's, they were offering a flat fee to clean it up for them, try to negotiate the penalties down. I was like, that is the correct thing you need to do right now, is go take this, get it cleaned up, try to get mercy. But biggest thing, don't do anything actually fraudulent. We're not really here to talk about how to get away with tax fraud today, though. That's just a caveat of, hey, if you did something fraudulent, this is not the advice for you. However, you get a random audit, what's going to happen? You're going to get a letter. Okay, you're going to have correspondence with somebody. They're probably going to request a lot of information, and they're probably going to come into your office. And when they're in your office, they're going to request documentation, all sorts of things to back up expenses. They may or may not come in. They may just request the information. But either way, you're going to have somebody you're corresponding with. Make that person comfortable would be the first thing. Don't be an a-hole to them.
Yeah.
Make them comfortable. They're there. They're doing a job. You got selected. No hard feelings about this. So when they come in, they're really going to ask for documentation behind expenses. There's no telling what they might be auditing. They might just be there because you're a random audit, and they might decide after a day or two they want to leave because they can't find anything. They might say, hey, there's $40,000 of travel expenses. I want to see the documentation around this. But they're going to ask for all this documentation. So you need to make sure that you put them somewhere nice. You give them what they want. You try to be as timely with it as you can. Don't piss them off. Don't make them hang around longer than they should. Just get them the documentation that they need and get it to them quickly. Afterwards, they're going to present findings to you. You may end up owing some tax, some penalty, just depending on what went on. Not the end of the world. It's really not, as long as you're not doing something fraudulent, not the end of the world to get audited. So don't sweat it if you do. It'll be okay. But don't also let it scare you into not doing anything and overpaying your taxes. It's not the end of the world to get audited. I've never actually sat there and dealt with an IRS audit. However, I've done lots of letters, correspondence letters with the IRS of, hey, this is what's going on. And, we never got to the point we audited any of those because I would just prepare a cover letter and attach all the documentation, let them know what went on, what happened. And every single one of my letters, we got solved without an audit. IRS was fine with whatever happened. It wasn't a big deal. And let me remind you, I was a college intern doing these letters. They weren't the end of the world, but yeah, overall, they're going to show up. They're going to audit you. Don't sweat it. It's not the end of the world.
That's great advice. So let's say we have, not a targeted audit. You're not doing anything fraudulent. You just got unlucky. You lost the lottery for the audit. Random audit. What are some things that this person's going to come in and maybe take a look at? What are some, maybe 3 or 4 or 5 things that are kind of the big things that they might take a look at?
Yeah, the first is going to be invoices. So any big purchases you make, you need to have invoices. And we're kind of going to start there and then go to some of the places we might get in trouble. The reason I bring up the invoices is, if you're on a check or something, they want to see an invoice. They want to see that you actually paid an expense. Like this can be common. I won't call them the industries for the sake of, if the IRS is listening, figuring out where they need to look on buried bodies. But I know some industries that aren't dentistry where they'll just double an expense in a very, very large one. And they'll be in an industry that an IRS auditor is unlikely to know a ton about. And that's why that IRS auditor wants to see invoices. They don't know if that's reasonable or not. They have no clue. But they look at it and it's a really big expense. So they're going to sit there and they're going to say, hey, let me just see the invoices, make sure this got paid. They might even contact somebody. Like I've been contacted. This wasn't the IRS, but I got contacted by an auditing firm if an invoice was real or not. And it was a company I was super upset with and refusing to pay their bill. So it didn't help. Somebody's contacted me and I'm just like, without looking at who sent it, I kind of ripped them apart. Unfortunately, the guy sent me a nice email. I was like, hey, I'm just an auditor with company X, Y, and Z. I'm trying to, look at their accounts receivable. I have nothing to do with your dispute with them. I was like, oh, I'm so sorry. Yeah, absolutely. That I'm that vendor. Like, no big deal. But they might even reach out, do that, just check in on it. But they just want to make sure that you're not cooking the books and you didn't write a $35,000 check to your spouse and call it dental supplies. So you need to keep all these invoices. You typically need to keep them for 3 years. I generally recommend 6. They can audit you for 3 years going back. However, if they find something substantial, then go back to 6. And again, we're not talking about fraud. If they can prove fraud, they can bust the doors wide open. So don't commit tax fraud.
That's rule number 1.
Yeah.
Plain and simple.
Oh, we should go with rule number 2 as well. Sorry, I probably should have kicked off with this one. You will report every dollar that you collect. And I don't want to hear any excuses or any this or that. Fortunately, this client was reporting everything, but I had a client tell me they got audited once. And I was like, well, what happened? They go over there. Well, I had a disgruntled employee that decided to get back at me that she was going to call the IRS and tell them that I was collecting a ton of cash I wasn't reporting. They said the IRS auditor came in there, was not friendly at all, was ready to bust them wide open. He said after about 2 days, the IRS agent figured out what had gone on, that I was indeed reporting all my income, and apologized and, for the inconvenience, and left on happy terms. But not reporting income, that's jail time.
Yeah, orange jumpsuit for sure.
Yeah, you're not going to look good in orange. So we want to get rid of that, and even worse, but if you go to one with zebra stripes.
Yeah, that's tough to make look good for sure.
That's going to be a tough look. So you're going to report every dollar. The things we're talking about getting audited for are really tax deductions, and they go into the realm of disallowed deductions. A disallowed deduction isn't the end of the world, but that's why we need this documentation. Is what they're looking for is, hey, you spent X, Y, and Z, and we want to see what that was for, what the documentation. So I think to your point, Tyler, we'll jump into the stuff that, okay, these are the things that you might not have documentation for. I went to Hawaii with the family, and it ended up on the corporate card.
Yeah, board of directors meeting, but we need to have documentation for that. All these recommendations that for things that you can run through the practice, you just need to make sure you have documentation. Should you get audited, the auditor asks for, hey, what's this Hawaii trip? Oh, board of directors meeting. Here's our meeting minutes. So again, that's just kind of a preface on what we're trying to accomplish here is, again, making sure you're as set up as possible for a potential audit in the future.
Yeah, it's going to go through. I mean, the things I've seen them beat up. We can start with travel. You need to have the documentation. You need to have the invoices for the expenses. Everybody should be on QuickBooks Online. I'm not going to say I'm the world's biggest QuickBooks fan. However, that's kind of the gold standard at this point for small business. It allows the CPA to connects the cards. You can move from one CPA to another without a huge problem. So that's going to be thing number one. You're on QuickBooks Online, though. There's an app, and you can open the app and just snap the receipt. So if it's $75 or more, you are required to have a receipt. So that would be the first thing, is making sure we have that. So that's vitally important. But let's talk about, other than having the receipts, the invoices on some of this stuff that might be towing the line. What type of documentation do you need? If you're doing a board of directors meeting, you need the board of directors meeting minutes. You said, Tyler, every day there needs to be documentation that you had a 4-hour meeting. Now, am I suggesting that you're sitting in a boardroom? Maybe not, but maybe leave out the part that you were actually sitting next to the pool with a cocktail in your hand. We don't want to lie to the IRS. We just don't want to tell them the full truth necessarily.
Yeah. One thing I've noticed about dentists is when you're with, a spouse, when you're with other dentists, dentistry's talked about and practices are talked about. So it's there.
Yeah. Now the board of directors meeting, some CPAs don't like this. Some CPAs said you could have done it at home. But I also tend to say, well, every multinational corporation, every big company in America, they could also do their board of directors meeting sitting in their office or do it via Zoom. And yet they're allowed to go to nice places. So I'm going to go with we can do that. Now, if you have the documentation, it's not to say it's guaranteed it's going to be tax deductible, but you have a leg to stand on. You should be able to negotiate your way out. Not a huge deal. Also, if you're doing that, everybody that's at the board meeting, your spouse, better be on the payroll. You cannot have a board meeting or travel expenses with people that aren't employees. But Tyler, what are the other ways here? We've got, CE. That's the big one. Don't lose your CE receipt, certificate, all of that. I've seen people beat up on audits where they actually went to the CE, but they just lost the documentation on it.
Yeah, got to have your CE documentation, your lodging associated with that. If you were ever to travel to another dentist's office and, you did a weekend over and you stopped by to discuss, strategies or treatment that they're doing, you take a picture there. Again, we just want to make sure you have the documentation showing the business purpose of this travel, whether it's CE, visiting another doctor, board of directors meeting. It's having that business purpose, having the supporting documentation, keeping track of all your receipts and invoices, and again, just being as complete as possible.
Yeah, another favorite one of mine is study clubs. So for those of you doctors that go places together to enjoy things, one, if you can find CE while you do it, that's probably better. I mean, I think one year we had like 8 doctors show up together to our ski seminar. So if you can do it and find the CE, that's even better. But if you can't, and the 8 of you are pissing off your spouses because you only talk about dentistry, somebody needs to make this study club official and put together, hey, here's the agenda, the name of the study club, everything. Put it together just like you would an actual study club. That way you've got the documentation, you can write it off, because, a lot of people will ask us, hey, me and 4 guys, we go skiing and we talk dentistry the whole time. Can we write that off? One, I mean, yes, you can, but you can't just write it off. You need to have the structure in place. You need to have the compliance in place. So I always like to tell people, yeah, if you slightly modify your behavior, you can absolutely write it off. So I'm not telling you, to go change everything you're doing, but hey, slightly modify the behavior. 4 of us are going skiing. Great. We're going to create an email chain, and we're going to, hey, the first annual meeting of, the good old boys ski, I wouldn't say ski, but
study club,
good old boys implant study club. And that's it. Or, we're the female dental owner study club. Great. Call yourself legitimately. This is the first annual meeting. Put together the agenda. Have everything ready. It's not going to take more than 20 or 30 minutes to accomplish all that. And there you go. You have documentation. You can send it to everybody. It's going to work real well. So that's the biggest key, though. Have that. You need the business purpose. You need all the receipts. You get a free travel day on the way out, free travel day on the way back in. The days in between, you need to have something business purpose that you were doing there. So I think travel is a big one. We also got meals.
Meals is a big one. Same thing. Spouse on the payroll. Eating dinner with the spouse. Likely the practice or dentistry comes up. That's a business meeting where you ate. So you want to make sure you're tracking your receipts. Again, if you have QuickBooks Online, you take a picture of the receipt. You say, who the meal was with, what you discussed, and that's your documentation there. That's a great thing for QuickBooks Online. You don't have to keep all these small receipts here and there.
Yeah, with meals too, if you want to get real granular, people run them 2 different ways. Some people kind of do it out of left field, probably going to get beat up a little bit for them. That's okay, as long as you know what's going to happen. We had a client in here says, hey, if I've been getting away with it for 15 years, so if they ever nab me and I have to give them 20 grand back, I still got 200 they didn't get to. And that's a good way of looking at it. Some people get scared of the audit, though, but meals in particular, if you really dive into the tax code, your regular meals are not tax deductible. So if I go to Chipotle every Friday, going to Chipotle with my spouse and talking about the business is not technically a tax deductible meal. It is part of my regular meal program. However, if I do something I would not have ordinarily done because of business, all of a sudden it's tax deductible. So you need to figure out how to use that to your advantage. I never swipe the business card when it's like a $20 meal. I don't even care if there's, I got an employee with me. It's like, I'll just probably put this on the personal card and move on. However, my business meals where I am entertaining, whether it be employees, clients, referring sources, whatever that, somehow those always end up, you want to take them somewhere nice, right?
That's out of the ordinary.
So that is out of the ordinary for me. I am not a steakhouse guy. So you won't catch me at the steakhouse with a personal credit card. I do enjoy being there, but there's always going to be a business purpose. I'm at the steakhouse. When I'm down the street at the, local dive, just getting some wings, it's going to stay on the personal card. So I like to say I somehow managed to get like 70 to 90% of my meal expenses for the month on the business card. However, that's probably only 10 to 20% of my meals. But in order to do that, you need to have the documentation, who was there, what the meeting was for. It's a business meeting. You had a meal. I like the way you put that, Tyler. It's not a meal. You talked about business. It's a meeting where you had a meal.
Exactly. And again, we're just trying to get the documentation for it. Another big one they might look into, just want to make sure you have documentation for, is if you're doing the Augusta Rule. You may not be familiar with the Augusta Rule. We call it the Augusta Rule because, hey, it's April, it's second weekend of April. Masters is going on in Augusta, Georgia. And I can probably tell you that the population of Augusta, Georgia is up significantly, and the tenants and actual citizens of Augusta, Georgia have probably moved out for the weekend, and they're renting their homes to corporations and receiving about $50,000 to $60,000 for the weekend that they'll be able to, or in week, I guess we've got to include the practice rounds, that they'll be able to report tax free. So we had
a client that Tiger Woods would rent their house and he'd bring in his own furniture and leave it.
Yeah, it's the different world. It's a different world, but just want to kind of leverage that strategy for the Augusta Rule for business meetings. We have a business meeting that rather than having it at an event space or a restaurant, we have these business meetings at home.
Tyler, I've got two favorites here.
Okay.
What are your favorites to pull this off, though? Because I think a lot of people probably get into trouble with this one because the documentation is going to be awful, meaning there's not going to be any. They didn't actually do anything. But
favorite is going to be, Christmas party is a very popular one, or, may not be a Christmas party, maybe, an annual party that the staff is over, patient appreciation, referral appreciation, study club, if we hold the study club at home. But I mean, the easiest one is that staff meeting, the staff party, Christmas party. We have pictures there. We're holding a party for the entire staff. We're providing food, providing drinks, and we're holding it at home.
And that is very legitimate.
Exactly.
You are
100%.
absolutely allowed to do that. You would have to rent the event space if you didn't do it. So that's my favorite. And you just went my second favorite too is, hey, are you having referring doctors over or other doctors? And if you want to know what you talk about, ask your spouse. And y'all are probably in there nerding out over how to do some procedure, which is great. However, it's back to that same vacation thing. You're hosting the study club. You don't need 50 people to be in a study club. It can be 5, but you need to have that business purpose. Other business purposes you can have, I think if you have a partner and you're having partner meetings at your location, that one was recently stamped approval by the IRS to some extent with those knuckleheads from Planet Fitness franchises that decided they were going to rent their homes for an extraordinary amount. So those are some of my favorites. And then from there, you can still do it if you have other justification, but it just starts to get tougher and tougher to justify. So I always tell people, if you're coming in, I like between 5 and 15,000. If you're not doing 5,000, you're not getting creative enough. If you're doing over 15,000, we're smirking a little bit too much.
And that's annually. That's not per instance. That's 5 to 15,000 annually. And instance-wise, we need to keep it below 14 days.
And doesn't mean you have to do all 14 too. Yeah. Some people, if they're doing, we don't have anything, so we're doing regular business meetings that we wouldn't want to hold in our office because the staff would hear. It's going to be a pretty low amount because you can rent a conference room for, I don't know, $500 a day, $700 a day. So you can still get something, but you're going to have a high number of days and a low amount of money per day in an instance like that. However, if you're having a staff party, it's depending on the house and, what it would cost elsewhere. Now, all of a sudden, if you're having a staff party or referring doctors or a party like that, that event space might be going for $3,000 a night. So, you might only have 4 nights and you're doing $3,000 a night. But the documentation on that is key. It is absolutely a legitimate strategy. But again, let's be honest here. We haven't lived in a world of audit for 20 something years, 30 years, maybe. Most people's documentation is lacking. And right about now would be a good time to get in some better habits on that.
Absolutely. So what do you need? Business purpose. So staff party, reasonable rental rate. So we get a quote from an event space, a private restaurant's private room. You get the quote, you save that down. 14 days. Don't go over 14. We go 15 days. It's all taxable. And then lastly, we need to write a check. The check is going to be from your corporation to you personally. That's an important caveat here. Sole proprietors can't take advantage of this. And what I mean is if your practice tax return is part of your individual return, it shows up on Schedule C, you cannot do this strategy. It's for if you have a separate return for your practice, you're able to take advantage of this strategy and you write a check from your practice to you personally. It'll show up on rent on your practice return and it will show up on your individual return, but you won't pay tax on it.
Now, perfect. And the last big one that's going to trip people up is the vehicles. Vehicles, we're going to need a mileage log. Now, the important thing on your mileage log, you should have 3 months. You need at least 1 month. I had somebody get audited once. They had 100% business use, negotiated down to 60% business use. Generally speaking, we're trying to get up to like 60 to 80% business use. However, you need this mileage log. And on the mileage log, your commute to the office is personal. Period. No questions asked. I know, oh, I went to the bank on the way. I went here on the way. The IRS is a whole checklist of you can't do this, and it's all these ideas you have in your head. You're not the first person to think of them. Somebody else did. And then they went and posted on the internet, and the IRS found out about it and said, hey, we're not going to allow this, which cracks me up because when the Tax Cuts and Jobs Act came out, we all started writing articles. We were a little guilty of it. Hey, here's 10 ways to take advantage of this. And when the final law came out, they basically said, here's 10 ways to stop you from taking advantage of this. So if you're thinking it, the IRS knows about it. You really can't do it. If you do have multiple locations, your main location can be the one closest to your house. However, everything else can be construed or, hey, I went to the store, I got something for business. I also got personal too while I was there, but great, we're going to leave that out. You had business use. We went marketing, went to a dinner, especially if you drove out of town for CE, something like that. But we need to have an accurate mileage log. The mileage log needs to have the mileage at the start of the month, the mileage at the end of the month, and it also needs to have each trip in there. Mile IQ is a great app people use. They use Mile IQ. It tracks it for them every time they get in the car, whether or not, they can pick. I was a passenger, I was driving, it was personal, it was business, easy way to do it. But pick a month that's going to be favorable to you and make sure you have that mileage log. You will get beat up if you don't have the mileage log and they ask about the car, guaranteed.
And Wes, I'm actually going to add one more in. One more thing they may look up is kids on the payroll. Things that you need for kids on the payroll. If we have them on the payroll, what we need is a personnel file. What I mean by personnel file is you fill out their I-9, their W-4s. They filled out a job application. You have a list of responsibilities for what they're working for, what their business duties are. You maybe keep a track of the time they've worked. And most importantly, you have a reasonable wage. We don't want our 6-year-old who's, taking out trash, stapling papers to get paid $30,000. That reasonable wage for a 6-year-old, probably about $6,000, about $1,000 for each year old. And again, you have your documentation, maybe take a picture if they're in the office working, if they're, filing, you take a picture of them filing and you have that personnel file to make sure that should someone come asking and say, you see your kid on the payroll, what does he actually do? Well, yeah, here's his list of responsibilities. Here's his files. Here's his job application. Here's him actually working. Here's his reasonable salary. You're going to be covered there.
No, absolutely. Well, those are the top ones. Overall, though, big takeaways. One, on any of these strategies, if you go to bed smirking at night, so giddy over what you did, you might have gone a little bit too far. Maybe think twice about that. We do want to push it, though. We're encouraging you to push it. We're just also greatly encouraging you to document everything. Documentation is key. And also make sure that when you talk to your CPA, a lot of people don't realize their CPAs are bound to the IRS to only put truthful things on the return. So if you took a personal vacation, which I don't recommend, I recommend taking a business vacation. But let's say you did that, because I know some of you knuckleheads out there are going to go right off a trip after the fact, even though you did nothing business related. That's okay. I like to toe the line as well here. However, don't contact your CPA and say, how can I write off my personal vacation? Mm-hmm. You tell your CPA it was a business trip. Now they know when they look, they were at the 4-star resort. That was a nice business trip. They know what's going on here. However, you put it in writing that it was a personal trip, and it's a personal trip, and they can't help you because they're risking their license, their firm, everything. So make sure you have proper documentation and communication. And just keep it in a folder somewhere. That way you have it, put it together, save it online. Just always be ready for an audit and get in that habit.
That's great advice. Documentation. Should they come knocking, you're prepared.
Awesome. Well, Ty, thanks for joining us. We'll see you all next week.